steelment events. I'm Ruchira Singh. In today's webinar, we take a close look at the status of India's iron ore mines post the auctions of some of the key blocks in the main producing state of Odisha. All of you might recall that in the month of March, the state government auctioned off 19 of its iron ore mines. However, after that, there was an economic slowdown and things really came to a standstill. But now, two of those companies which have won the blocks have actually done a symbolic groundbreaking ceremony to show that things are fine and they're ready to move ahead. You'll be seeing some of the images very soon. However, as we go ahead, there are many questions as to how things might pan out in the future, how the market might be, and how quickly producers will be able to take over and start the work as normal. So here you can see some of the images. This is GSW. You can see the top management there. And this is their mines so in Nuagaon. And here is the other company, ArcelorMittal, with its own ceremony, groundbreaking ceremony, Bhumi Pujan as it is called. And so these are images from just the recent past, just the last few days. So these two companies, the biggest of the companies which have won the blocks, are ready to go ahead. However, let's see how things pan out for them. So to answer some of these questions, we have a panel here. So we have one policymaker, one strategist, one lawyer, and one analyst for all of you. And I'd like to introduce them to you. So our first panelist is Dr. Umesh Chandra Jaina. He is Joint Director of Mines in the government of Odisha. He's a mining engineer with an MSc degree and a PhD in mining from Cornell's University in Colombia. He's held several positions in various districts in Odisha. And he's got many awards also, one of them being the Observer Award, which came from the Observer publication. He's joining us from Bhubaneswar. Our second panelist is Mr. Kapil Mantri. He's Head Corporate Strategy and Business Development at GSPL. So his work involves M&A, market intelligence, mineral auctions, and the area of expertise is really steel, iron ore, power, coal, and mining. He's really active with the various trade bodies. He has some position or the other with PhD, CCI, National Council of Power, Association of Power Producers, also with Sponge Iron Manufacturers Association. He's an engineer from NIT in Karnataka and an MBA from the Indian School of Business in Hyderabad. Our next panelist is Advocate Anand Verma. He is managing partner at APT Legal India. He specializes in disputes. He's a disputes attorney. He's an advocate on record at the Supreme Court. He's member of Supreme Court Bar Association and Delhi High Court Bar Association. And his background, BSc and also LLB honors from the National Law University in Jodhpur. Our next panelist is Ms. Nishta Mukherjee. She's head of research at Steel Mint India. She has 5 years of experience and her area of expertise is iron and steel. Her background, she has an management degree in finance and marketing and also a Bachelor of Engineering specializing in electronics and telecommunications. So welcome to all of you and thank you for your time. And I'd also like to welcome the participants who are with us today. It's hundreds of them. I think last count was close to 400. There might be more. So thank you very much for registering. And I'd like to explain the proceedings of the day. First of all, we have Dr. Jaina, who will give an update on what's going on the policy front and on the ground in Odisha at the mines. He'll talk for approximately 5 to 8 minutes. So participants, if you have any questions, you can put them down in the Q&A box, which is at the bottom of your screen. So do wait until he's close to the end of his talk. And we'll be taking some of the questions and posing those to him since he has to leave by 5:45. And after that, we will have a panel discussion with questions coming from myself. That would be for about 45 minutes. And after that, participants, is going to be your turn. So you can put in your questions there in the Q&A box. Do identify yourself, say the company you represent, and also give your name so that it's easy for us to place you and to know the context of the questions. Right. So that's that. So let's get started. And I'd like to first of all request Dr. Jaina to give us an update on what's going on in the state, what kind of stocks there are, who are some of the producers who have started the mining, and also if there are any issues, and what, of course, the policymakers like yourselves are doing at this point. So, Dr. Jaina, over to you.
Thank you, ma'am. Good afternoon, everybody. Odisha, in fact, has started its action procedure soon after the MMDR got amended. We started right back in March 16 and got stuck up with a case in the Supreme Court. But later on in March 2018, we moved ahead with auctions. And till now, we have auctioned successfully 31 blocks in all. We had floated 36 blocks, but 5 blocks we could not get any bidders, requisite bidders. 3 bidders should have been there, but we got lesser bidders, so 5 blocks has been annulled. Those are, of course, not of iron ore mines. Those are of different limestone and other mines. Of these 31 blocks which has been put to auction, 26 leases were expiring. In fact, 23 were expiring on 31st March 2020, and one was expiring on 25th of May this year. So we have put all 24 auction, and out of 24 auctioned, we have already issued successful bidder in case of 16 leases. MDPA has been signed in case of 16 cases already, and 12 mining lease has been granted and executed so far. And the rest are also going on. Today also there are 2 cases in the district level going on. MDPA is being signed. So we'll be ending with, I think, 18 blocks. 18 blocks will be executed within time limit. Two of our friends are not coming up. Those are we are looking for them to come up soon, because their date, the 30 days limit of time from the date of issuing the vesting order and the LOI is completing soon. So they are not coming up. I should not name those, but 2 cases we are afraid that they are not coming up with their requisite fees and other things. Rest has already been done. We are expecting that out of 24 cases, 2 are stuck up in the court cases, and 2 are very recently issued with the preferred bidder. So out of 20, 18 will be executed within time limit. 2 we are afraid that they are not coming up as yet. And another question was there would be scarcity of mineral. In fact, those leases which have expired are continue to dispatch minerals, whichever the stocks was left out with them. They are continuing to dispatch. They will be continuing to dispatch till September end, because as per 12 GG and 12 HS, they are allowed 6 months time from the expiry of their lease. So there is, in fact, no scarcity of mineral so far, and no report of any scarcity of mineral in the industry sector has also been reported to us. And besides that, these all 12 executed leases and those 8 leases, 6 leases which will be executed will start operation and dispatch soon. Today, in fact, the latest news is that JSW has got his web bridges approved today. So JSW may start dispatch from tomorrow, I think. So things are moving on very nicely, and there is nothing to be panicked. We are all on job, and we are pioneering the entire country, I think, because we are well ahead of other states in the super auction and on the mineral scenarios on. So I can assure the panelists and other audiences who are listening that there should be no panic about the mineral supply to the industries, and whatever is possible on the part of the government, we are here eager to do. Rest is on the part of the user agency. They are also overwhelmingly supported us for achieving this. Only 2 cases we are afraid that they have not been turned up for taking their LOI, and they have not come up with the fees, requisite fees for signing MDPA and grant order. Besides those, the rest are okay. That's where I stand. And if there will be any question, I will be eager to answer. Thank you.
Dr. Jena, could you give us a figure for the stocks that are there in all the mines in Odisha?
Stock. You carry on. I will give just. I'm collecting a figure. How much? What total?
Okay. So I'd like to request the participants, if you have any questions, you can start putting them down in the Q&A box, and we'll pull it out from there. And the one question that comes to our mind is, 2 you said are stuck in litigation, Dr. Jena. So what kind of matters are these? Two of the mines are stuck in litigation, so they haven't really signed up with the MDPA. So could you just give us the nature of the litigation that is there at the moment?
2 are under litigation. That is one I can name that is Guwali iron ore mines. The erstwhile lessee has gone to the Supreme Court asking for some time in compensation of the time lost for different litigation. That is pending with that. Court has asked us not to execute NDs without the leave of the court. The other one is Jharkhand Ores, who has won the lease of our Jilling Novolota mines of erstwhile lessee of SL mines. They have also gone for the same kind of litigation. So in those 2, because of the court case, we have been stuck up.
Right. I'd like to bring in the advocate here. So Advocate Verma, what kind of a resolution do you see for the matters that are now being talked about? One of them at Gwali, the previous owner is asking for some more time for the handover. Do you think it might be amicable? I mean, as in just a period of waiting time, or do you think it might be a little more contentious?
I think it will be extremely contentious. The government of India and the government of Odisha have been very clear and very straightforward in terms of policy that they have now set their path on the leases being run via the auction mode. And as Dr. Jena has rightly pointed out, there are so many of the successful bidders who have now executed their agreements, who have now executed their mining leases, and the regime has gradually changed. On the merits of the cases which the 2 erstwhile lessees have filed, that is for the Supreme Court to decide. The reason for which they are asking although they have not used the word extension, they are calling it adjustment. And because ultimately extension is something which the court may not allow, but adjustment on account of genuine delays which they faced is something that the court may consider. And it is well known to the industry that this is the period of 2014 to 2017, starting on 25th of April 2014 and going up to late 2017 and in some cases in beginning 2018, when a number of the mines in Odisha were not working because of the pendency of the litigation before the Supreme Court, because of their approvals being stuck on account of the litigation and otherwise with the MOEF, with other authorities. So that is where their plea is coming in, that this is a delay cost to us, which according to them is genuine delay. And that delay of around 3 to 4 years should be adjusted while the last date of 31st March 2020 is calculated. So here, as your question was whether it will be amicable or contentious, I would imagine it will be very contentious because the entire policy is at stake. If the court were to allow, and it's not just these 2, there are a lot of people watching from the sidelines. There is already one more case from Karnataka, which was filed in June, and where the Supreme Court has said where the Supreme Court has said it will hear it along with the two Odisha cases which Dr. Jena mentioned. They were scheduled to be heard in the first week of July, but because of the state of affairs right now, where a lot of hearings are not happening because of COVID, physical hearings are not possible. So therefore, it's going to take some time. And yes, it is going to be extremely contentious. Whatever the court finally decides will have an impact on the entire industry, will have an impact on the others also, which are slated for auction in the coming future. Because the state government is taking this, rightly so, very carefully and very seriously. They have not proceeded with the vesting orders. They have not proceeded with the execution of the leases till the Supreme Court gives them clarity. So that's the clarity which is awaited.
Vesting order and leases. I mean, if we were just to write, 1, 2, 3, these are the issues where there are legal loopholes, where there are difficulties. So could you just say in 1, 2, 3, what could be the issues that are glaring?
Actually, I would say in reply to your question that the government of India and the government of Odisha have been very clear in their policy making from the beginning of this year. Right from January 2020, when they brought out an ordinance to insert Section 8 capital B to ensure there is continuity in operations. A main theme of this event has been continuity in supply of iron ore. And that is something which we had discussed earlier as well. So the government of India has been very clear. They want, and these are big changes. These are not changes which have been seen very regularly earlier. So they said way back in January 2020, when they brought out an ordinance that the leases will have continuity of operations for 2 years, even when the new lessees take them over. Then came the ordinance was replaced by the Amendment Act in March 2020, and all the antecedent regulations and policies have also been amended. One thing which the industry has faced, and I can say that as a lawyer who has represented the industry in these cases, a key factor in the supply side disruption has been on account of regulatory ambiguity in the environmental and forest regulations. Because many times, and I say this carefully, many times one department of the government which is dealing with mining and mineral policy is not really in sync with the other department which is dealing with environment and forest policy, which has led to a lot of litigation, which has led to a lot of stoppages in the past. On this occasion, however, the situation has been different. In March, they amended the EIA notification. On 31st of March, they amended the forest guidelines as well to provide that whoever is the new lessee stepping into the shoes of the old lessee has continuity of operations for 2 years, during which they can apply for the new permissions and continue to transition.
Right. Okay. So we have questions from people and coming in from, and we have one question from Anupam Gupta, who's asking how much is the capacity of iron ore which is stuck in litigation, and what is the balance output which might fall under normal production? If Dr. Jena, you could take that question.
Yeah, but can you repeat?
Yes. So how much of iron ore resource, which is mineable, is stuck in the litigation, and balance what amount is available for a normal production? Is it a small amount which is stuck in litigation, or is it a substantial amount?
In fact, it is not small, although those are good mines having more than 200 million tons of ore. But we have got much more in offering. So that will not have an impact. It will not have much impact. In fact, what you were asking earlier, we had 40 million ton of iron ore stock of those 24 out of 24, 19 were iron ore mines. So in those iron ore mines, we had got 40 million ton of stock left out, of which till now 8.2 million ton has been dispatched, and 31.9 million ton is still lying over there. So those will be dispatched in any case by September 30th. So this much is already available, and the new lessees will produce their own ore and dispatch. And also there are about 40 odd mines which are in operation already. Those will also contribute to the supply of the iron ore to the requiring plants.
Right. So we have a question from Sani Ghosh. Sagni Ghosh, who's asking, when will the virgin iron ore blocks be auctioned? I believe the next tranche of auctions that the state government is looking at are the virgin blocks. So, Dr.
Yeah,
J,
yeah.
when are those? Also, an additional question: how will you make sure that they are dispute proof? Like there are no regulatory ambiguities, like Advocate Verma is pointing out. So, for the future blocks, the virgin blocks that are coming up, how will you make sure that they are
We are ready with 8 blocks, virgin blocks, and 5 blocks which we are put to auction, but due to non-availability of a requisite number of bidders, those have been annulled. So, including those 5 and 8, we are ready with 13. Anytime in the coming month after completion of these 24 cases, we'll be going for auctioning those. Maybe by August, we'll be floating notice for inviting tenders for these 13 blocks. And furthermore, we are getting ready with 22 more blocks of different minerals. So auction will be on and on, but we will be soon doing this auction for these 8 blocks, along with those 5 blocks for which no bidder were
right?
And which were annulled because of non-participation.
Right. Thank you.
I mean, just to add to Mr. Jaina on the previous question, the total auction which happened was for, in a MDPA basis, 79 million tons per annum, which was auctioned, and the one stuck in the litigation, only 2 mines, around 12 million tons per annum.
Right. So in the new tranche of,
mines.
Right, Mr. Mantri, the new tranche of the blocks that are coming up, virgin mines, and I think also some of them are also developed mines, if I'm not mistaken. So will JSPL be participating in those auctions?
Yeah. So they're not developed. Most of them are virgin only, but we'll definitely be looking at those mines seriously.
Right. Okay. So I'll move on to Nishtha. Nishtha, this year has been a pretty bleak one, and you've been tracking all of the data. So, how has the production and dispatch patterns changed after March 20, when we saw the lockdown coming in? So, any insights and data that you can share?
Yeah, so in the month of March, when the leases expired, after that, in the month of April, we saw a sharp decline in Odisha iron ore production. The monthly iron ore production from Odisha working mines was recorded roughly around 5.3 million tons. However, gradually in the month of May, we saw a slight recovery in Odisha iron ore production, and the volumes were recorded around close to 6.2 million tons. So increase was seen from both the players, both captive as well as the merchant players. While if I talk about the dispatch pattern, yes, of course, because of lockdowns and material transportation issues, labor availability issues, then the dispatches were hampered in the month of April, and it fell roughly around to 2 million tons in the month of April, which is excluding the dispatches for exports. But again, in the month of May, with gradual ramp up of operations at steel mills and improved capacity utilization, the dispatch actually increased and rebounded to nearly 3 million tons.
Right. So that is where we stand. And also, Nishta, do you have any figures on exports? Are they doing well? Because the steel producers want to export a lot. How about the iron ore miners? Is there demand for iron ore exports?
Yeah, in the month of April, the Indian iron ore exports in total were around roughly 1.6 million tons, and out of that, share of Odisha would be roughly around 1.4 million tons. But in the month of May, there was a sharp rebound in the export shipments, and as per data compiled by Steel Mint, the export shipments hit over 3 years high in the month of May, and were recorded around 3.9 million tons in total, out of which share of Odisha was roughly around 2.5 to 2.6 million tons. The key exporting companies were Rungta Mines, SM Niryat, Kashvi, SL Mining, and JSPL. These were the key ones. And in the June also, we expect the numbers to be on the higher side.
So what does that indicate? I mean, there's a very robust demand for iron ore right now overseas, or is it the advantage they're taking of the slightly lower prices this year because of the pandemic?
In last couple of months, we have seen a sharp increase in global iron ore prices and increased buying interest from China for iron ore, be it for billet or any other steel product. And iron ore prices have increased almost 10%, I believe, in the month of April and again in May. So there was an increase in prices. Plus, I think the miners had the stocks with them, so they had to clear those stocks. So they were also quite aggressive in clearing those via export shipments.
Right. Mr. Mantri, what is happening on the ground at JSPL, on production of the steel production side? And also, I believe you have been turning active in exports of fines, and Nishtha just pointed out that there's pretty decent demand for iron ore at this time overseas. So what are you seeing really at your shop floor level and also the export market?
So I think fortunately we're doing good in both ends. We just today released our production numbers for the quarter, and we've increased the sale volumes by 12% over previous quarter. So with the only one fortunately who are growing in terms of production and sales in tough times where the demand is subdued. How we've been able to do that is we've started focusing on export. So in last 100 days, we exported, around 1 million ton of steel. So which is one, and hence we are operating close to our full capacity utilization on steel making. On iron ore, we have a mine, Tensa, and out of which we are exporting roughly around 50,000 tons per month of low-grade fines. So there is definitely a good demand, of low-grade fines, especially coming from China, and that's something which we think will give a good opportunity for Indian iron ore mining companies to explore and exploit the low-grade iron ore fines.
Right. So Dr. Jaina, I'll just read out a question from one of the participants. This is from Vikash Singh, and he's saying royalty and premium, how are they going to be calculated for merchant miners and those using mines for their captive needs?
It will be same for both. We'll have to take the value published by the IBM, the price of ore, multiplied by the percentage whatever they have quoted in their bid, and royalty would be 15% of that, and the premium would be whatever percentage they have quoted in the bid. Whosoever has quoted 101%, that would be 101% of the sale price plus 15% royalty. That will be calculated for both in case of the captive as well as in the case of the merchant.
Right. Dr. Jaina, one more question, if I can direct to you. This is from Jitendra Kumar Nanda, and he's asking, what happens if the existing stock in the mines are not disposed of by September? Who would be the owner of the stock in the mines?
The MCR 12G GG allows 6 months time, and HS allows the state government to give another 1 month time on request. So after completion of the 7th month, if anything is left in the mines, that would be the state's property. That would not be anybody's claim. Neither the actual lessee nor the present lessee would have a claim about that. Whatever left out to the state's property, and the state will decide on its disposal, whether it will be auction or anything. In the event of anything left out after 7th month, that will be state's property.
So, Advocate Verma, do you see the stocks being a bone of contention? Do you think stocks are substantial enough? And the prices have moved so much. Some of these stocks have been there for years, and prices have moved down. Now they are moving a bit up. So what do your industry members who you work with have to say about that?
While I can't disclose what they have to say, but I can say that yes, there can be a situation of the state government considering some extension because of the absolutely black swan event of COVID-19. The Dr. Jena is absolutely right. The timeline provided under the rules is 6 + 1, 7 months, right? But I don't think it would be unreasonable for someone to come in and say, let's see, what happened in April and May was completely unprecedented, unforeseen. So why don't you give us some more time in lieu of that to allow us to sell beyond 6 + 1?
In fact, government has no provision to allow anything, but government acts on the law, as you know, sir. But if the court will intervene, then things will be different. But I'm afraid to say that government has any scope. There is any scope for allowing more than 7 months time.
So we have a question from Aarti Gupta. Again, Dr. Jena, may I direct this at you?
Yeah.
Sorry, this is VL Das. Is there a provision for pre-embedded clearances and approval? Is there any planning of Odisha government to come up with pre-embedded clearances and approval? And if yes, those mines? Pre-embedded.
That has been the rule as of now. When we put to auction those 24 blocks, it was not there. It came later on. So now here, whenever working mines will be put to auction, it will be an embedded auction. Means with all the clearances, it will be put to auction. What happened now? After auction, we had to get the clearances from the erstwhile lessee and vested with those with the new lessee. Those will be done away with, and prior to auction, it will be embedded. It will be hereafter embedded auction in case of a working lease to auction.
Right. I will come to the next theme now, which is the iron ore prices. And Mr. Mantri, could you give us a forecast, if possible, on which direction iron ore might take and what kind of prices we might see in the rest of this fiscal year, or maybe the average price for iron ore this fiscal year?
It's difficult to put a number, but what we expect that iron ore prices should remain soft. If you see IBM prices, they rose, till March. From September to March, Indian IBM prices kept on increasing by almost 50 to 100 rupees per ton. And though the IBM prices for the reasons are not out, but the market prices, ex-mine fine prices are now around 1700 to 1800 rupees. Right. Also, there is globally there's a softening of steel demand. Even in India, the production numbers have fallen. There's an increased capacity. Iron ore capacity addition is happening with these mines. So net, we expect the prices to remain low. Another reason that we expect the prices to remain steady in India is the high premium paid by the miners, right? So if the IBM price remains high, many of these mines may have challenge with regards to the viability. So I think it's everybody's interest that the iron ore prices remain soft. So we don't expect another timing of having a 2000 plus iron ore fines prices in India. Should remain lower.
Is that something like a red flag you're raising, Mr. Mantri? The premiums, now it is glaring at you in the face because they're also high. Markets have softened. The demand is also looking down, and the pandemic looks like it'll dampen things for quite a while now. So do you think premiums might become an issue going ahead, and there might be unviability? Dr. Jena, could you tell us about the premiums? They ran so high, and in future auctions that you have, would you follow the same kind of pattern? And in fact, one of the participants also asked if you're going to use the same model based on IBM to work out the prices for the next set of auctions that are coming up.
As you know, the price is fixed by IBM with a specified method of calculation. So it is all left to the government of India and IBM how they fix up the price. We have no say on that, how they make it and how they will be making it. But once they declare a price, of course we will have to abide by that. And whatever price will be published by the IBM, we are bound on that, and we will be calculating the royalty as well as the premium. Whatever percentage one has quoted, we will calculate on the price published by the IBM. So and IBM, how we will take and how there is a study group, of course, involving all the state heads, and I mean, Minister of Mines is looking at it for fixing the royalty rates and method of calculation of the prices. But we are least worried about that. We are to see the price published by the item, and whatever publication will come on that, we will be calculating the percentage. That's all.
So, Dr. Jina, you are indicating that, for the next set of virgin blocks that are coming up, and they're coming up as soon as in August, I think that is what you said. So, similar pattern, same pattern, in fact, of price discovery will be there for the premiums for the forward mines also. Mr. Mantri, what do you think about it? Do you think it's a good idea to have that same kind of methodology and with premiums running beyond 100%?
I think we share the methodology. There are no problems with methodology, right? I mean, in the new regime, if the auction is the way to go and it's most transparent mechanism, then the methodology is perfect. The expectation on the premium, in my personal view, I think it will not go as high, because this set of mines, obviously, they're all operating excellent mines versus the new set of mines are greenfield virgin blocks. One has to invest a lot of time and money. So they will see, smaller bid premiums, won't be as high as these many. Also, a lot of companies has compulsions to have at least one blocks, especially steel players, right? JSW, Osler, JSPL, all of us, we want at least some raw material security. Right now, if each of us having acquired some block, I think the appetite is lesser. But overall, I think irrespective of the premiums which go, it's in the interest of the state and interest of the country to have as many blocks, as much production as possible, right? Even if the premium per ton is lesser, but on overall basis, everybody gains.
Right. So, Advocate Verma, what do you have to say? Do you have an opinion on the premiums that ran really high, and that was really a thing that everybody was discussing, because it was it went up to 150 plus in some of the cases. So, do you think this also works into your litigation, the cases that you're working with, that the premiums are really not gelling well with what people are doing?
Not at all. This is completely a commercial call. Mr. Mantri has put it very well. Ultimately, as far as the steel producers are concerned, for India, which has long had a pro-merchant mining policy in terms of iron ore production, a lot of the bigger steel producers, except Tata Steel and Steel Authority, were to a large extent dependent on buying their raw material from the open market. And the recently concluded auctions gave them a chance to have security of supply, and which is why you saw the premiums going where they went, right? 154% in one case. The newer tranche, as has been discussed by you and Dr. Jena, these are all virgin blocks. And as compared to the blocks which were recently auctioned, there will be some, the clarity on the iron ore reserves in those blocks and the quality of those reserves will not be the same as the recently concluded tranche. Plus, there are other market factors at play. So I think the premiums would be corrected to some extent.
Right. So is there any kind of, back of the envelope calculation to show that, when JSW, ArcelorMittal, tomorrow, when they start the mining, I think JSW is already about to start it, will they be running losses? They have to compulsorily produce 80% of 2 years average production. So looking at the market scenario, are they going to be mining iron ore in losses? Who could answer that? Dr. Jena, what do you have to say? Will there be losses if they mine iron ore from tomorrow?
I don't think there will be any loss, because the names you quoted, they do consume themselves. They go on value on everything. So if had they been allowed to dispatch iron ore only, there would have been any loss or something. But they will be add value to that and then sell. So I don't think there will be any loss to them.
Mr. Mantri, what do you say? If tomorrow you're allowed to mine at Gwali, and looking at how the market is, mixed signal really, iron ore exports are doing really very well. Domestic market is subdued, but some kind of markets are there overseas. So mixed picture. But do you think if tomorrow you had to start mining at Gwali, you will be in losses, or you will be in some
So
kind of.
Rishira, it's a
144, if I may tell the participants. Your
yeah.
for Gwali was 144%, one of the highest. So
Yes.
what do you have to say?
So, it's just a way you will look at it, right? If one has to look at X mine iron ore prices, then yes, it will be in loss. Us, the JSW, anybody, if you look at X mine price compared to the market price, you can't make money. But, the way an integrated steel player looks at it is not the X mine, but landed iron ore material, number one. So in the long run, right, most of these players will have an efficient logistic solution, a steady supply of iron ore and a consistent quality, right? All of those factors more than compensate for the higher premium. So, JSW, for example, is planning a slurry pipe line. Arcelor already has a slurry pipeline. JSPL is planning a slurry pipeline. So if there are three pipelines all the way to the plant, the logistics cost, which is currently 1,200 rupees a ton, will come down to 200 odd rupees a ton. And that's only possible with a consistent source, with a dedicated source. So in the maybe 1 or 2 years there'll be some loss at the X mine level, but and the landed price level, logistics savings, consistent quality will more than break even. It will be a challenge for the merchant miner. I fail to understand, unless they have a strategic tie-up with a captive person or their own use. I don't know how will make money at a high premium. That's challenge.
So if in the weeks ahead, if all of these 19 players who have their blocks with them, well, 18, if they all start doing their groundbreaking ceremony and get set to start producing, and they all need to produce 80% of what was produced in the last couple of years, are we looking at an oversupply of iron ore? Does the lawyer have any opinion on that? 80% of last 2 years' production, compulsorily, each of these miners have to produce. The market is somewhat subdued, but there's a compulsion. They all need to produce it, and there are 19 of them. So do you think this might be, they might not be happy with it and ask for some kind of relaxation?
The merchant miners won't. Mr. Mantri is right. The merchant miners, there's a lot of pressure in this model on the merchant miners. As far as the captive players are concerned, there is, I believe, a certain amount of flexibility available to them because of their captive plants, wherein even if the law requires them to produce 80% for the next 2 years and more than what the older lessees were producing after that, they will still have some amount of flexibility because of their different business model. The merchant mining model, for those who have won the leases in the auctions, is going to be under a lot of stress.
Right. Dr. Jaina, do you think there might be some relaxation on this policy? Is there a possibility, and how could?
No, this is a very hypothetical question. Basing on if and buts. So I don't think there would be any such occasion, because last year Odisha had dispatched 158 million ton of iron ore, and we are at this juncture of the end of the quarter. There are only 25 million ton of iron ore dispatched so far. So if we will be reaching 150, that is a huge gap. So last year that much of quantity has been consumed by the industry and exports. So this year also, whatever left out, if they do 80% of that, that would be within that, even 20% less than whatever is there. So I don't think there is any question of panicking, but if the pandemic will continue for the whole year, or some restriction, otherwise other restrictions would be there, I don't know. But if the mining scenario will be left to its own, then there will be no overflow of stuff, no shortage. It will be a very smooth one, because whatever production we are capping at is 80% of that. Whatever they produced yesteryear, 80%, but it is 20% less than whatever made last year. So it will never overflow. and simultaneously there will be no scarcity too.
Right, right, Dr. Jaina, thanks for that. And you need to go now. It's time for your next meeting, Dr. Jaina. But quickly, can I ask one question which is coming from one of the participants? And this person is asking, could you please give us an indication on 2020 and 2021 volumes for production in active mines, production suspended and due to come online, and production likely to remain in litigation? Well, the question is a bit longer, but can you just give us these key figures?
On litigation, I will not comment, but we are we are just on way to make it sure that our production level, this is at least as much it was last year. What is that is 147 million ton. We will be trying to reach 140 million ton at least, and dispatch of 150 million ton. So we will be trying our level best to do that. So if it will happen, then there will be no scarcity neither nor overflow.
Right, Dr. Jaina, thank you very much for this, and you might feel free to leave the meeting. And thank you very much for all your support and for all the questions that you have answered and the data you've given. Thank you.
Thank you so much.
Thank you.
Thank you all.
Thank you. Goodbye.
Goodbye.
All right, so we shall continue the questions from the participants, and we have one coming in from Shashi, and this is directed at you, Nishtha. Shashi is asking, are the export figures that you have given, are they only for fines or lumps, or they include pellets as well? And could you repeat these figures for the benefit of this participant?
Yeah, the figures that I mentioned are completely of iron ore, excluding pellets. It just includes iron ore fines and iron ore lumps. So in the month of April 20, the iron ore export shipments in total were around 1.6 million tons. And in the month of May, it increased to almost 3.9 million tons. This is excluding pellets.
Right. Thank you for that. And another question is coming in from Sanjay Chakraborty. And Mr. Mantri, could you please answer this? How does one plan to ease out the situation of logistics, considering there is robust demand in both domestic and exports? Well, he says domestic also. I don't know. Maybe the situation has changed. So please update us on the logistics issues that you are facing.
I think that the question is very valid. Logistics remain the biggest challenge right now. For example, we have significant number of orders for fines, pellets, but we're not able to service all of them primarily due to logistics. Indian Rail remains a big constraint. The road network in Odisha is still not up to the mark. So that's a challenge, and we're working with railways to ensure whatever optimization can be done. Road logistics, we're requesting state government that whatever district mineral fund, etc., revenues which they get, they should invest in road logistics. But that's a challenge which remains, and one has to figure out by their own methods, a little bit here and there, that whatever they can do. But
what is the update on the labor issues? Is that still bogging the industry down and also your company down? Mr. Mantri, if you could hear it,
I think labor. Yeah, I can hear you. Can you hear me?
Yes, now I can.
Yeah. So country as a whole, I think labor issues still remain significant, especially in the north and west. It's higher. Eastern states, the labor issues are lesser. The labor which has migrated from the various states are yet to come back. So a lot of places. So even our steel demand, it's picked up again on the east side, but north and west remain subdued. Fortunately, for us as JSPL, we don't have it as a big issue because our labor was always there at the plants. We never shut down the plant, so it is there as for the production. But it affects us from the consumption and demand side. The demand from west and north, as I mentioned, is subdued because of labor issue. But I'm sure now it's improving. So it's a matter of time. People are getting used to the new norm and taking all the precautions and getting back to work. So it's picking up, it's coming back, but taking some time.
Right. Thank you. Next question is from Aarti Gupta, and can I please direct this at Advocate Verma? So she's asking, she's asking, what is your view on the anticipated mining policy change for taking away the 700 odd mineral blocks and auctioning them covered under MMDR Section 10A, 2B and C?
Yeah, that's a good question. I read that one.
And further, the second part of the question is the Niti Aayog seems to have a bit of a contrarian view on this proposal. So could you please?
No, there are two strong views on this. On the one hand, the law was laid down in 2015 that all those prospecting licenses, those applications which were in the pipeline, would be given a sunset period, and they would be allowed a period of 2 years to convert those applications, those licenses into mining leases. And people have taken significant steps in that direction. They have invested significant amounts to convert them to leases. So on the one hand, if there is any curtailment of those rights, there will be a valid ground to say that vested rights have been affected, and therefore there is a legal impairment of those rights. On the other hand, there is, and as I said, there are two arguments, one for each side. There is a strong argument from the policy side that you cannot have three systems running parallelly for grant and continuation of mining leases. So you have one set of leases which are continuing, and which some of which expired on 31st March 2020, some of which will expire in a few years. You have another set of leases which are looking to be granted by 10A2B and 10A2C, and which by virtue of Section 8 capital A would be for 50 years, and another set of leases which the successful bidders have recently won. So there is a policy dichotomy there, and the government would be well placed to say that we want to have only one kind of leases. We don't want to have three kinds of leases and three kinds of regulations. But how do you balance that with rights? That's an interesting question. There's a lot of reporting being done on this. The Supreme Court has laid down some principles which say that once somebody has acquired some rights to convert an application to a mining lease, those rights cannot be disturbed. But we'll have to see what form do these changes finally take for the court to test them. Because as of now, it's only, they're not yet there. It's only a discussion. It's only reporting.
Thank you for that. So a question from Sanjay Chakrabarti, and Mr. Mantri, can I pose that to you? He's asking, do you see the current India-China border tension putting a dent in the pellet and iron ore exports to China? Is there any talk in the industry on this front?
So yeah, I think good question, and that's a risk and uncertainty which we face, right? So far, India has, taken a strong stance towards import from China, and the same if done by China, then definitely the pellet exports from India will take a big hit. We haven't seen anything so far right now, but that's a space we have to continuously watch, and we'll have a on Indian iron ore export as well as the pellet export. So if that happens, Indian iron ore prices are going to see a fall.
Okay. So Amir Kumar is asking, will the big houses bagging the leases, referring to the big companies, execute the mining work at site, or the excavation work will be outsourced to local contractors? Mr. Mantri, could you answer this?
So what is the question? Sorry.
Will there be a lot more of outsourcing of the mining work? Is what this person wants to know.
Yeah. So I think if you see the recent examples of JSW and Osler, right, two big steel companies, business houses, and both of them have, instead of doing the mining in-house, has decided to outsource the operations, and it helps both ways, right? I mean, those people who have been already working on those mines have local know-how and all the influences, so they're doing it. I think a model is much more efficient, and yes, this is in a way departure from the usual model at these companies who are operating. So going forward, I think this will how mostly the industry will work.
Right. There's one question from VV Benu Gopal asking, is there any foreign investment happening in these mining interns? well, in the mining operations of mine operators and logistics? Mr. Mantri, could you answer that?
So nothing so far we've seen except Oslo, if you consider definitely a foreign investment. But apart from that, there's no significant foreign investments in the mining sector. We don't even expect much to happen on iron ore mining. However, logistics, there is some foreign investment. For example, the companies like Gatex, etc., who actually, buy rakes and lease them out for different schemes like SFTO, own your wagon kind of schemes of government of India. So logistics space, there is the foreign investments. Pure mining, don't think it exists apart from ArcelorMittal, and difficult for one to come and play.
Right. Advocate Verma, do you see any foreign interest in Indian mining? Are you aware of any foreign interest in Indian mining? Has anyone approached you, or are you aware of any such foreign companies who show some interest in getting into India's market? Very, very big, second largest steel producer.
Uh, Difficult to say right now, and I think we some indication in this will be given from the recent coal auctions which have been launched, wherein foreign investments have been allowed. When the Prime Minister launched the coal auctions on 18th of June, so some indication will come from there. But ultimately, the local know-how and the domestic challenges are something which a completely foreign investor might find it difficult to navigate through. As Mr. Mantri rightly said, ArcelorMittal is an example when the global ArcelorMittal has taken over Essar Steel assets through the insolvency route. But then they had a presence in India, and the insolvency route was a good opportunity for them. So difficult to say. I think it will need more policy initiative for foreign players to come in.
I see. What kind of policy initiatives? Could you just give just a couple of examples? What kind of policies would be favorable to them?
Frankly, a lot of what the government is doing right now would be favorable to them, provided it plays out that way on the ground. Because as I mentioned, the biggest disruption on the supply side has been the environmental regulations. Dr. Jena, before he left, rightly mentioned that the state is trying to give pre-embedded clearances. If that works out, then that's the best possible solution for the country. And as of now, they've tried to transition smoothly by giving, as I said, 2 years of clearances from the previous lessees to the new lessees. But it all depends on how it works out, and that these clearances, because historically the industry, and we have seen that these clearances, when they get stuck for a number of years. 4 to 5 years was the average for the clearances to come through. So let's hope that that's not the same situation going forward. There's a lot of change happening in the EIA regulations also. There's a proposal in the pipeline that 40% expansion in the EC capacity will not require public consultation. That's a big proposal. That's a significant proposal which is being debated right now. If that comes through, that will also have an impact.
So there's a question from Ritvik Seth asking, what is the current transportation cost for iron ore for integrated steel players? This cost versus when they use their own slurry pipeline, what will be the cost saving per ton? Mr. Mantri, can you take that question?
So I already tried to address that. See, transportation cost will vary from where the mine is, where the plant is. It'll be different from JSPL, will be different from JSW, and will be different for Osler. But say in our example, for most of the mines, transportation cost varies from 800 rupees a ton to 1200 rupees a ton in a mix of rake and road. If we have a slurry pipeline from the slurry end to the mine to all the way to the plant, it will be in the order of 200 to 250 rupees a ton. So the huge delta of 800 to 1000 rupees a ton, which one can expect if there's a slurry pipeline.
How about your own plans for a slurry pipeline? Will there be common pool, common slurry pipeline for the producers, or will
difficult? So right now, for example, I think each JSW is planning their own slurry pipeline. They're working on one from the Nuagaon mine to all the way to Paradip port. We are planning another service slurry pipeline from Burbil to our Angul plant. Right, that's where the large demand is. That's where we think. So this common pipeline, you should think. Asler already has a slurry pipeline.
Already has one.
Yeah, they already have a pipeline from near Balda mine.
Right.
Nabuna.
Okay, right. Coming to you, Nishta, I don't think we have asked you about your forecast for the price trends. How the price trends have been in the last couple of months, and a house view that you might have on which way prices will move.
So we discussed this briefly. I think last 6 months, till March, the prices were increasing for iron ore. Then it was largely flat. There was slight uptick in May, and it softened again in June. Going forward, we don't expect prices to increase too much. It is largely flat to maybe a little soft in iron ore in India. Uh, a couple of global events we'll have to watch for is if there is any mine shutdown. For example, there was a big mine shutdown happened in May globally, which affected prices to some extent. Also, if
Right. I think we are losing the network there. But Nishtha, how about you? What is your
domestic level.
right? So you're predicting flat to soft prices of iron ore during this year. And Nishtha, how about you? What is the Steel Mint view on prices going forward?
Yeah, in the month of April and May, we observed a decline in domestic iron ore prices in Odisha, both in lumps and fines. Like, for example, lumps were offered at around 3,700 X-mines levels, which came down to roughly around 3,500 X-mines levels in May. And June was a pretty stable kind of situation, I could say. Similarly, in fines, the price levels in end of April was around 1,900 X-mines, inclusive of taxes, which again came down slightly to 1,800 levels in May and June. So there was a decline in last 3 months, and we have been hearing of a slight uptick towards the end of June. But if there is no supply shortage, considering the upcoming monsoons, which could be a factor that could weigh on the prices, then I see prices may remain supported for a very short term and then may observe a decline.
There's another question for you, Nishtha, coming from Aarti Gupta. And she's asking, we read on the Steel Mint portal a few weeks ago that ore movement for export by road was being curtailed in Odisha due to the monsoons. Is the status same still? And roughly what volume is moving for export by road?
Okay. Yes, in last couple of weeks, I think there have been some issues regarding the road movement, and therefore the road freight has also increased sharply for exports to Gopalpur, Paradip, and all these ports. So I think there is still a limit on the trips that have been levied. So I think there is still a tightness in material movement.
Okay, so Aarti Gupta has another question, and this one is for you, Mr. Mantri. She's asking, stepping into the shoes of the 1 to 2 odd merchant miners who have won the mines in the recent auctions. It appears that focusing on low-grade exports may come to the rescue of such players to some extent. What other options do they have? Strategic tie-ups, forward integration in due course. So really, the merchant miners are a small lot, and the market really is not being made by them anymore. So what are the trends that we could see here?
So I think the
Fall in that
question,
category, but asking you to comment on others who are
yeah.
the merchant miners. So what could they be doing in the time in future?
So the answers are hidden in the question itself. The only options they have is one, maximize the low grade iron ore. So the mining methodologies give some flexibility to manage the grade, and I think they will try to maintain the grade to a level wherein they can export profitably. The other two options, as she mentioned, are also some may look at some either strategic tie-up or a downward capacity build-up, or maybe a mix of both. So those are the only options. Pure play commercial merchant mining based on such high premium is a very difficult thing.
Right, right. One question for Nishtha. What were the responses to sales iron ore auction from its Odisha mines? Could you give us an update? This has been an ongoing story.
Yeah. So after in September 19 last year, government ordered Steel Authority of India Limited to sell 25% of its annual iron ore production into the merchant market. We have been seeing regular auctions coming up from their Odisha mines, especially Bolani and Barsua. And since Feb 20, they have been conducting auctions. And as per my knowledge, they have sold almost 250,000 tons so far in the auctions they have been conducting. The price levels, if I talk about for fines, Fe 62.5 grade that they have offered from these mines, where they were managed to fetch bids roughly around 2,270, 2,280 levels, loaded and exclusive of taxes. And in the recent auctions conducted in the month of June, the bid prices were roughly around the 1,300, 1,500 levels.
Okay, thank you, Nishta. So there's one question from Lloyd's Metal saying, has the vesting orders for non-disputed mines been given? Or is all under hold pending the Supreme Court order? What is the actual mining production that has happened in the last 3 months in these mines? Who is mining if vesting orders are not given? Advocate Verma, can you take that question?
I believe the vesting orders for all the non-disputed mines have been issued, and which is why the agreements have been executed, which is why the lease deeds have been executed, and which is why, as Dr. Jena mentioned, 2 or 3 of them are likely to start production in the next day or two, and I think more of them would start production in the next 10-15 days. I don't think the Supreme Court litigation is affecting anybody apart from those 2 mines. And the state seems to be moving forward at a very good pace, and there is no confusion there. So the vesting orders have been issued, which is why the state is moving ahead.
Right. Okay. There's another question from Gaurav Rateria asking, if supply from Brazil normalizes and global iron ore prices fall in the coming months, how do you think it will impact export of pellets, and where will prices be? So, Mr. Mantri, can you take that question?
So it will happen sometime sooner or later. We don't expect this itself will have an impact of quantity of pellet being exported, because there's a big delta in the domestic pellet price and export pellet prices. So the quantity of export will remain the same. However, the prices will obviously reduce and the realizations will reduce in line with the international. Export of iron ores will be the first one to get hit if there is a supply increase and softening of international iron ore prices happen.
Right. So there's one question from Tapas Padi saying, OMC and MDPA are planning for expansion. So are they going to be the sole survivors? So will they be the last people standing in the merchant, mining category? Nishta, do you have any opinion on this? Looking at the massive expansion plans of both OMC and NMDC, do you think they're going to capture all of the merchant mining space going ahead?
I don't completely agree to it, yes, but since NMDC has a different set of customers to cater to, because they generally supply to Chhattisgarh-based units and, of course, southern and some of the Western India-based units. But Odisha-based people and the West Bengal-based steel mills, they generally source it from Odisha merchant miners only. So now, since we have new players coming in after the recent auctions in the merchant market also, so I think OMC will be one big player for Odisha market, apart from the new players who have actually added up after the recent auctions.
I see. Thank you. Okay, so one question for Advocate Verma. In this whole list of about the 19 blocks that have changed hands, do you think there is scope for more legalities here? So it's 19 parties have given up their blocks and equal number of people have taken over the new blocks. So in this particular list, is there any scope of further legalities, or is Gwali the only one which is fighting it out in the court?
Gwali and Jilling.
Okay.
Gwali and Jilling. No, I don't see. I think the formalities have been concluded. It is too late in the day for any of the old lessees now to go to court and seek to challenge anything. If something had to be done, it had to be done in March and April. Now it's too late in the day.
Right. Okay. So there's no scenario of stopping of production or stays which might impact, the output from Odisha mines.
Ruchira,
Nothing
just
from. Please continue.
sorry, just wanted to add, there could be one possibility of, as Mr. Jena was mentioning, two miners have not come forward in achieving their plans. So there could be some litigation there, because end of the day, if they don't do within their prescribed timing, state would want to encash their BGs. And to that extent, they will, if go to the court and try to get a stay. Those are the two possible, mines wherein the investing, or the development hasn't happened so far. Those are the
Mr. Mantri is right. Mr. Mantri is right. Those two who haven't, so there are total 4, Goali and Jilling, which are stuck up in court by virtue of legacy issues, and those two which have, for whatever reasons best known to them, they've not come forward to complete the documentation.
Right. Okay. Okay, so we're coming to the close of this webinar, and we'll take a couple more questions. There's one from Bholanath Ghosh, and he's asking, why do you think the global iron ore prices are rising even though there is a 15% less steel demand? Mr. Mantri and Nishtha, after that, could you please answer this question? Why are the global iron ore prices rising when the steel demand is bleak?
I think this is more to do with supply constraints, right? There's been a couple of large mines which have been affected due to COVID-19 impacts, etc. So the iron ore price increase is coming largely due to supply constraints, but not so much because of demand.
Right. Okay. And Anisha, what is your opinion? Why was there a small rise in iron ore prices when steel demand looks so bleak?
That was very well said by Mr. Mantri, that it was due to Brazilian iron ore mines shortage, because of which there was a sharp hike in prices, and the prices still remain above $95+ levels as of now. So they are still maintaining on the higher side. Plus, to add on, there was a hike in futures as well, because of which spot prices are continuing to be on the higher side, but not relative to the steel demand, because that is globally actually on declining mode.
Right. So we have just the last question, which will come up in just less than a minute now. But before that, I'd like to draw the attention of the participants to the survey that has come up possibly on your screens. And it'll be really very wonderful if you could just put in your poll in this online survey. It is a really tiny and a brief one, and it's going to help us. Thanks. So here's the last question, and it is directed to you, Advocate Verma, and it is coming from Satyadeep Jain, and he's asking, what's your view on Ministry of Mines' proposal to cap existing captive leases of private players to 2025? And can there be legal challenges in this case, in the case of this proposal coming through?
Yeah, so this is in a way the same question which was put by Ms. Aarti earlier. Yes, as I said, there have been a lot of report. There has been a lot of reporting on the government's proposed amendment to cap the captive leases from 2030 to 2025. As I mentioned in reply to that question, the arguments on both sides are, number one, that the existing right holders will say that I have a vested right to continue my lease as per the law which has granted me, as opposed to the government saying we want policy consistency. We can't have 3 different sets of policies for 3 different sets of leaseholders. So that's and the government will also say that auction is the mode which is giving me the highest revenue, which is also helping me in steel production, steel generation. It is giving my steel producers raw material security. So these are the considerations that the government can come up with, but 100% there will be a legal challenge. I don't think either the current captive producers or the ones who are looking at getting their pending applications converted into mining leases would leave it without litigation.
All right, so that's another red flag being raised, I suppose, in this webinar, that there could be more litigations in the future, which will be all related to captive ownership of mines. So we're going to look out for that. And on this note, I'd like to conclude this webinar. I'd like to say thanks to all of the panelists. Thank you very much for your time today. It has been a pleasure to be with you and to hear you out. Thank you. And also, I'd like to thank all of the participants who have been with us, and also apologies for not taking all of your questions. There are 101 questions flashing out there on the Q&A box. Sorry for that, but hope you can just email across those questions, and if they are relevant and not being covered, maybe one of us will try to answer those. So thank you very much. And for those people who wish to listen to this webinar again, we will be publishing an edited version of this webinar, which we have recorded. And you can look out for it in the next 2 days. It'll be there on YouTube. So do look out for that. And also in future, we'll be coming out with many more webinars and lots of topics. So you can look out for more of Steel Mint events on that. So on behalf of all of the Steel Mint group, I'd like to say thanks to all of you. Thank you very much and goodbye.
Thank you.